Hmm. Hey guys, I'm just playing around with some settings, and then I'm going to You should be able to see my screen. I'm just trying to see what is coming out on YouTube. Yeah, there you go. Oh, the screen backtesting. So let's see if I get to if that's working. What's on the golf? Which comp? A. Do you get on the? What's that? Sorry. Oh yeah. Yeah, I remember you golfed a bit. Yeah, yeah. Just playing with it. Just got some background music. See how loud it's coming through on my side. It's quite loud. How about now? Oops. It's almost on as quiet as it can go. Oh. Hmm. Can you keep speaking? Okay. Peter's much louder than you, David. Okay. Yeah, you sound far away, so I wasn't sure if it was. And I've got the music going quite softly, but I wasn't sure if it was just my overall settings were quite quiet. Mm-hmm. Very soft. Okay, so I think I can make it just a little bit louder then. I've got to, if I'm streaming to YouTube, then they'll flag me for copyright. So I was trying this playlist, which is no copyright music, but it's like elevator music. Televator? No? Oh, okay. Yeah, for sure. Let's try to get something a bit a different song. That was terrible. So other like video game, I've got this other one that's where is it? Lo-fi, no copyright. This one's fun. It's fun music, but it gets where is it? It's like a video game. Huh? Donkey Kong, something like that. It's like one of those real 8-bit sort of like this is that's the cover called World Map. All right, so I was just gonna see I'm gonna look back at the stream and just see like just gonna play with a couple settings. I think I've got it, so it's gonna be fairly clear. I'm just not really sure what the sound was going to be like. So yeah. Oh, okay, cool. Yeah, I think it's the stereo speakers that comes out in the laptop. It just sort of blends all the music together. How about this one? I think I'm going to have to get like maybe a playlist of like maybe 15 that aren't too intrusive, but just give some background music. I wonder if I can. So I've got mic. Where's my screen? Can you hear it loud enough? I can barely hear it. It's going to be trial and error with all these settings. Once I got them though, it'll be good. So I'm going to go soon to the charts and see if we can catch something to make it more interesting. But this is just a good little test stream. Because I prefer to do this a bit earlier. If like London Open, or like if I'm bored or just sitting here, might as well just do a stream. Or just see if we can collectively take something. So microphones full, speakers. If I play with this setting, does it get louder or softer? I think the music just went to a quiet part of the song. Okay, make it a little bit louder. How about that? What about when I'm talking? Is it sort of in the background, or is it sort of cut in and out? Oh, okay, so it's loud now. All right. So let's take that back down. What if I play with this? Did it get louder? If I'm talking now? Or was it not changed? Okay, we'll see. It comes out on top of it, yeah. Okay. All right, we'll see how this goes. So I was busy. Why? Yeah, for me, like if I'm just streaming and like there's not much going on, rather than just having silence, I listen to music normally anyway. It's just sometimes I share the music with my sound, or I'm not. But I thought maybe it'd be a nicer experience for people watching to hear that music as well, but have it soft enough so it doesn't bother them. But then if I'm not talking, or if I go get a coffee or something like that and have the stream running, then at least it's just not silence, because then people will be like, oh, the screen's frozen. Okay, so I'm going to go into analysis. One other thing I wanted to check was just to see if... oh, there's that song again. Is that too loud? Because it's a different... Okay, sweet. All right, so I'm going to go into some charts now, and then just see. All right, see what's going on. See, I might have just missed that move when I was just playing, but I need to mark the chart up properly. So let's remove some of this older stuff. Going to keep these little horizontal lines. Let me know if the music gets too loud. Let's put it on chill vibes. So we've got Homer driving, just chilling. Okay, dokie. So New York low from Wednesday, and Asian low from Wednesday. Once price it opened, I was really keen on taking sells last night, but I didn't want to hold during the night. But then this move that I was anticipating came during the Asian session. Why this happened was late news that filtered in from Goldman Sachs revising the Fed terminal rate up an extra 0.25% of interest rates. So that made sense for that sell-off to come. It's just unfortunate that it sold off an Asian session, which just happens. Now, this New York low and Asian low from yesterday, why I keep these on here is because if you've got a New York low, that's going to be a sensitive point. And then when you have an Asian low, it could be the London low, but whatever the low is, whether it's the Asian low, London low, or New York low, that is also going to be the low of the day. That makes sense for the daily. So when that daily, like if we were just looking at the daily chart and say we didn't have the understanding of looking at particular sessions, anyone that wants to trade and has learnt cookie cutter courses will be saying the lows and the highs of the wicks of the day represent like sensitive points. So now what we can do is we're just reinforcing a little bit of like obviously this, like here's a high of a day, here's a high of the day, here's a high of the day. Now one of these highs of the day, or these highs and these lows, is going to be one of those particular sessions, high or low. So that's why I'm keeping them on here, and what I'm doing is just removing the ones that have been taken. So like New York low from Tuesday, Asian low from Tuesday, these were going to be potential reaction points when we just gotta get my pen back up. When we had these like these are going to be reaction points eventually, and you can see it held for 10-15 minutes, and then it broke through, went to the next one, held for 10-15 minutes, came back up, retested the little zone that established itself above the New York low from Tuesday, and eventually we just broke through. So it's picked up the liquidity that was sitting under there, and obviously there wasn't much liquidity because it didn't really stop price at all. It's just it paused price and then it kept on going. So I'm fine now just to remove them, just so I can keep my charts fairly clean. This shadowed colored box, that sort of followed, I mean, you guys sort of know what this is now, is it's usually the wick. So we've got rejection, and it was based on this candle. Whether it was on the 5-minute time frame, 1 minute or 15 minute, I'll draw the same box on it, but I can see that, actually let me just look at it just to confirm. I'm pretty sure I just drew that on the 5-minute, but it could very well be the 15-minute. Actually, it might have been the 15-minute. It's definitely not the 30-minute. It's just a wick on the 30-minute. 15 minutes, a little bit more clear that this was an attempted liquidity grab. And this wick here could be retesting this candle. Even though we've got little equal lows, but we've got a little liquidity grab. And when I draw them, sometimes it just adjusts, but that's how it would have been perfectly. Just on the wick, the candle body, and the low. So that became a little interest for if price could just react. Now it didn't react off of it, so it was just for me visually, just to remind that there's something there, just to be careful of. But it didn't hold any weight. It didn't give us any confirmation to buy or sell off of it, and it paused, then broke through. So once it's been liquidated, I can just remove it. Now, if I'm marking up the charts fresh today, I did have little zones down here where I thought price could react from, and the timing of those reactions would be more probable towards the end of a session or the middle of a session, because you'll have like this big impulsive move, and it just makes sense that there's going to be a pullback eventually. I'm just going to have the chat box up here just in case I miss some questions. How's the music? Is it too loud? It's a bit different tune now, I can hear now. Yeah, it'd be good just for me to play back and just sort of see how the volume changes as I play around with the settings. These little zones here, these little thin black lines are just for me just to also things I see. So what we can go back and I think it was on the high. What's that? Sorry. Oh, okay. No, that wasn't to me. So this would have been from, if it doesn't match up on this time frame, like 5-minute time frame, I can't really see why this would be a zone that I'm looking at. So it's obviously a zone on a different time frame, higher time frame most likely. 5-minute, I can see that probably same deal actually. This zone here definitely stands out on this time frame. So that's a because I drew this on Monday, so I need to try to think back 3 days what it was. But if I go and have a look at the 15-minute, nothing on the 15-minute, 30-minute, nothing, 1 hour, here to here, yeah, and lower the, yeah. It's probably on the 1 minute that I had those things drawn up on. Let's have a look. Maybe 3 minute. Check all time frames. That's always a good. Okay, so the 3 minute makes a bit of sense with this candle. And what I did have originally here was, it was more of a zone like that. And what I did was I just left a line on the bottom of it. So I'm interested in these areas, but now that they've been taken over here, originally the lines, when I did eventually get to the charts, they were like all the way across, but what I'm doing is just bringing them to when it got consumed, which was here. Tap, 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 and then eventually broke through. So liquidity is taken. Then it goes to the next spot. I can bring it to here, and then I've still got one more remaining down here. These ones here. No, it's just me. Like I'll reset. I'll remove these eventually, but it's just me thinking like, where's liquidity getting taken from above or below? So at the moment, it's looking for liquidity to the downside. So that means the order flows to the downside. So I'm looking for just like, if I was going to go with the trend, I'd be looking for pullback to structure and then continuation. So same thing that was up with all these lines. It was leaving all these POIs on the way up. And eventually when it gets to a higher time frame area of a pullback, that these POIs are going to be targets for when price comes back down to, and then it leaves its own series of POIs on the way down, which could be places that would look for pullbacks again. But at the moment, it's just for me to think about, if I'm bullish, I'm looking for pullback to first or second structure. If it gets to a point here that I'm looking for a reaction, then I'm looking for manipulation and for price to come back down to some of these either structure or some of these POIs that have been left over, because we know that if it's like a valid liquidity grab from the downside, it makes sense for those liquidity grabs to be retested. So I've just kept them on, and then eventually I just don't want to have like a million lines going across the chart. What I'd prefer is just have the lines that are going across that will either be zones that have been unmitigated, so zones that price can come back to, or it's going to be my longer lasting monthly levels, which will just always stay on there, or more recent session highs, lows, 50% points. So what I need to do here, because I'm still relatively unorganized for this morning, today, is I need to mark up my current sessions. So New York low and Asian low from the previous day, you can see that it's still held weight. So I do leave these for a little bit longer. But what's missing on my chart from today? Sorry, you're really quiet, Dave. Yeah, I need to do that. I need to look at my zones. And need to put my sessions because we're into the London session now. So the main thing I'm missing here is my Asian high. So that's the first thing I put in. So that's my Asian high. And this is like, I could do this much quicker, but I want to talk through it. And then as I'm doing this, this would be my sort of routine that it's just giving me focus. So rather than just immediately looking for a trade, I'm like, okay, let's just talk out what's happening so far. Asian high from Thursday. If I've got an Asian high and Asian session's finished, that means I've got a low. So here's my Asian low. And then it means I've got a 50% point as well. So measure from high to the low. And this midpoint is my 50%. Now I can mark it up. I could mark it up. Or I can say, well, it's already pulled back to 50% and then push down. So I'd mark it up just to remove it. But before the pullback, I would have been putting that 50% in. Now what I can do is just say, well, where did my London high, London low, or European open be? I can just do a quick scan, and this is what I'd be normally just, if I had sessions on, I'd say Europe open or pre-London, didn't do anything. It's just sort of hovered and it sort of gave you that pullback. But now in London session, so what I'm going to look at is just, I've got a London high, which came back to the New York low of Wednesday. So if I put in that London high, well, at the moment it's the current London high. From Thursday. And now if I've got that at where this New York low and Asian low is, I'm just going to use that now as my area, and now I can remove these yellow and blue ones because now I'm looking at that London high area to be manipulated. At the moment we've got a London low as well, so I can move that down, but I'm going to have to keep on moving it as it keeps on going lower. So I don't want to just necessarily leave it there. What I can do is, if I want to have something that if I think it's going to react off of here, pull back London 50%, I can just use a fib as well, and I'll just have something that's got a 0, 50 and a 100, so that way I can sort of just monitor where that 50% is all the time. So that's one little tool that I'll be using. But until then, I'm just thinking order flows down. It makes sense. Now, once I've got my session highs, lows, 50% in that I'm happy with, now I can do a little bit more deeper analysis and to say, all right, well, we know that we've had, where did London's obviously selling at the moment. London pulled back. London initially manipulated the European high and it pulled back into that Asian 50% and grabbed liquidity, because if Asian pushed down so strongly, there would have been liquidity left behind. And some of these liquidities that were left behind would be imbalances or just simple pullbacks to previous rejection areas. That all really makes sense. But then how can we spot inside when the algorithms either executed trades or where profits were taken and stuff like that? It leaves clues. We can see that that was a liquidity grab. Price had pulled back to this sort of structure, had a bullish candle, made it look like it was going higher, and then closed very nice and bearish, and we had a strong push down, leaving an imbalance. So we know that there was a sell executed at this point. Algorithms bought up to then sell, and then close their buy and leave the sell going, and the buy that they opened just to manipulate price would have been closed at zero profit. But then what it did was it enabled them to buy up to get a better sell entry or sell price to then push price down. So we know that that's going to be a area that if price comes up to this area, this is where they're quite interested in buying from. So it could be a potential area that there's leftover orders, or we can have a reaction from there again. So I would be marking up to go short or to have a reaction. And if everything lines up and there's enough room risk reward wise for a trade, we can potentially trade off of that. So because the idea is that if they bought to sell and then price did come back up there, then what they can do is double dip and just sell more, unless they've offloaded that liquidity at an exit area. Or if it comes up again and say whatever happens, and because not just one institution or one smart money that you're trading against, but say price does make its way back up here based off maybe the more buy orders sitting under here. If price comes back up here and they really wanted to sell and get to a lower price, they might add another position, or they don't want their trade to go into a losing position. Now, if it does break above, then we can be looking for buys, but this would just become a point of interest. So if we saw price make its way back up to a point of interest and then start showing signs of rejection again, maybe then it's an easy one to take it down again. But what I'm trying to do is just look at where the areas make sense that sells got taken, and try to understand what's the idea of London. Obviously, Asian was sell. London didn't want to sell the low, so they've pushed price up, and now they've executed the sell. And now if they're breaking through Asian low and making a new low for the day, many times, just the way gold reacts is that we find gold will make its way back to the London 50% before the New York session, or pre-New York, and then New York can then take it lower, or they'll manipulate the high or low again. That makes sense? It's just one of those things. Is like very often we look at yesterday I was up here, and if we looked at the timing of the 5 minute, we had the Asian session was pushing down, and then Europe opened, and then London was actually just taking it higher, and we're trending up, and we had a few little executions of buys where the liquidities were grabbed. But if we measure the range from London low to the London high, around about pre-NY time, so focus on this line that is along here. So we'll find London made a high. The timing of that was 10:20, so more or less 30 minutes ago, yesterday. And then what price did was it waved its way back down to the 50%, and from that 50% we got a nice reaction. So that's the kind of reaction I'm looking for again, potentially. So this, by the time we got that reaction, was 11:35 local time, which is in about 40 minutes. So what a potential play is that if I'm looking, I'll remove this, but if I'm looking at current price action, and this is my London high, and I'm moving down to a London low, then maybe just leading into NY, maybe price will make its way back up to 50%, and then we could look for a sell again if we see the right reaction, or if we've got points of interest along here as well, so we've got a confluence of things. We just need to see where that London low is going to be so that we can ascertain where our London 50% is going to be. So at the moment now, what I can look at is just where the liquidity, what points of interest were there. Like we can see this liquidity grab and then a retest, and this is a liquidity grab as well. So I'll go through all time frames, but at the moment daily is pushing down. So the order flows to the downside, makes sense for a retracement and then push down again. 4 hour, we've got London session gave like a little doji weak bullish candle. We've got more points of interest to go down. This is a liquidity candle here. So it makes sense that we could even retest the open to the 50% of that wick, which would line up perfectly with this monthly level at 1755. It would make sense for price to retest that and still be bullish in the higher time frame. 1 hour, that 4 hour wick doesn't stand out too much on the 1 hour, but we do have this little this red shaded areas like an imbalance, which has been mitigated already once by that 4 hour liquidity candle. But then now there's probably leftover liquidity sitting here that if price came down to it, we get a reaction. We would have imbalances here on lower time frames. At the moment, I'm just going to leave that horizontal line. You could remove that. Yeah, you could remove this now and then look at this, study this area. Yeah, but if something was coming down to that, depends if that's going to be, needs to be retested again. If something comes down, breaks the low, you'll probably get a manipulation pullback. And if it's breaking the low a second time, it might push down then 20 pips and look for the next area, because just under this imbalance, which has already been mitigated, retested, now if it's retesting this low and it wicks down, spikes up, and then retest that low a second time, it's actually looking for more at the next point of interest underneath that, which would be, there's a little imbalance here, and you could say this is like a little order block as well, where price pushed down and pushed up. So I could leave this on, but I don't really like taking trades off of the top of these little imbalances. So what I would actually prefer to do is be marking up the bottom of it and then removing that, and then to say like this area, what I'll do is I'll just do that so it goes all the way across to the right. So now it's, you see it's just, when it eventually gets taken, I'll just move that line so it's wherever the candle touched it, I'll end it. So it's not, so I don't have a million horizontal lines on my chart. Looking at this area again, 30 minutes, I sort of got areas, enough areas above and below price. So what I want to do is study this move for pullbacks. So 15 minutes, let's have a look. This is the 4 hour wick still, but let's look closer. Liquidity candle and this wick. So I'll mark that. Potential pullback zone. There's a little imbalance in here, so I'd like to see that. I don't want to take a trade underneath this imbalance. I'd prefer to be at least above it or this area. That candle doesn't show much. This candle doesn't show much. This candle doesn't show much. If anything, this could be a Hey Rodney. Hey Maron. If anything, this could be like a little 15-minute accumulation order block. So it's 15 minutes, 30, 45, 1 hour, 1 hour 15. So it would make sense to see reactions off of that area. Whether the tradable reactions, not too sure, because we are getting to this low. It would make sense if we break that wick and then come back up. And then if we get the right reaction from here, potentially. Oh, no worries, man. That's all good. Yeah, just jump in and out. I'm recording this. This was more of a test stream, so I just wanted to see some settings. So I'm playing around with a few things, see what the sound comes out like. This one here. Yeah, absolutely. Yep. Yeah, looking for confluence. So this was 50% Asia. Yeah, whether you keep it on or take it off is when you're feeling like it's getting too cluttered, or you're looking at other areas inside of here. But you're right, like I'm happy that it for me, having the Asian 50%, having a liquidity candle, being up inside of this wick, it's a good zone for a reaction. It makes a lot of sense. Whether it's enough to at least pull back price and then close above it, and then we know we've got an easy one to the top side. But either way, we're just trying to identify reactionary areas. Yep. Little order block. So I could study this on the lower time frame. Look at the 5 minute and then just see, okay, where they're like liquidity grabs and retests inside of here. Not really. It's more of just a kind of structure. Like if we look at what the London high did, London, we've got this liquidity grab candle. So we've got another one just above it. And then we've got this imbalance as well. Does that make sense? Now, when London came online, what did they do? They pushed up, took out the Asian highs, European highs, and then we had a bit of liquidity grab, little attempted liquidity grab, then the liquidity grab, and then this was also a retest. And then since then, what have been making most of the transactions? It's been that the algorithm's really been just kicking along. So I'll do a quick 3 minute look, see if there's anything here. So why I don't want to take a trade underneath this imbalance is more like I'm happy to take a trade off of structure or this, but if price was above this structure and then breaking above these wicks, this was an imbalance on the slightly higher time frame, and I'd rather see that imbalance completely closed before taking a sell. So I don't want to take a trade, like say I've got an imbalance and then I had structure underneath it and price was breaking that structure and now was inside this imbalance area. I don't want to take a trade underneath the top of it. That's what I meant. Because if I executed a trade inside of here, it could very easily come up and then just fill that imbalance. That makes sense? Yeah. So what I'm doing is like, instead of having a shaded gray area all the way across, I'm just using the top of it as my point of interest, because I don't want to take a trade in this gray zone unless it's hit the top of it. If I'm looking for buys, then I'll just keep the bottom of that imbalance, not the top of the imbalance. So we've got structure here and it's a little bit messy. So what I can do is just refine it a little bit. I just want to capture most of the candle bodies and most of the wicks, understanding that there are going to be fake outs above and below it. But that looks like a pretty good representation of this as structure. We've got two fake outs, two to the bottom and one to the top. And when it eventually did break, it was the retest area. So if it's closing above this area again, we might get a little pullback and then to the top of the structure. Then if it's breaking up again and we're getting bullish structure forming, then we're likely going to go to fill the imbalance. There's another imbalance here. So I could mark another line, but then I already am looking at this area because I know this is my 5 minute, I think it was 5 minute, my 5 minute or 15 minute wick. 15, yeah. Sometimes it doesn't go to the top or the low of imbalance zones. Yeah, that's true. Sometimes it doesn't. But those are the ones I'm more happy just to miss as well. Okay, so this is all looking fairly good. Maybe I could even add this little line and then just say, especially if it's inside of here, that could be a potential decent area. This imbalance was filled when it pushed down, came back up, the wicks are connecting, little tiny one in there, but I don't want to mark every single one, otherwise I'm going to end up with too many. Can I make a video on imbalances? Yeah, that's what I was planning on doing. I did a little one yesterday on structure 1, structure 2, and I want to do a series of smaller, shorter one's just covering some of the terminologies, and then we'll blend them together, making a 3-hour video all at once, covering everything. As we know, it's like it's just not easy for people to watch in continuous. So I think 15-minute videos will be good. But I've got that idea down. Thanks. Okay, so now going to the 1 minute, which is our fantastic time frame. Came back late last night. Watched that as well. Good recap. Oh yeah, brilliant. Okay, so now once we had the London high, once with London open, manipulated the highs of Europe, and we see the algorithms kick in. It simply just pullbacks to first or second structure. So here was the manipulation, the liquidity grab, and here was the retest. So once we've got, this is the formula, liquidity grab. Let me just type it in. Liquidity grab plus retest equals structure formation. I think I'm going to try to work on how I can do that, but I think that's what you understand, what makes sense. If we get a liquidity grab, say something like this, and we've got a little liquidity grab, and we mark up that wick. Let me change the color. And whether we get a reaction from the open or the 50%, but once we do get that retest, and then price comes up, and we get a retest, doesn't have to close bullish or bearish. We just want to see it take it, and then like if we get that with a break of structure, break of structure can come before or after, but once we've had a liquidity grab plus that retest, very often on the lower time frames, then it takes time, but eventually we start seeing structure play out. But we need we need these two things first before that structure can start to form. Now, once we had, yeah. You mean what version of liquidity grab this one was? Oh, you sound like you're underwater. Nah, sound like a robot now. It's getting worse. Yeah, he's better. Oh yeah, no worries. Oh, it's not on this time frame. Yeah. I was sort of just remembering what was on the higher time frame. So this area on the 15 minute, or no, it was on the 5 minute, wasn't it? Yeah, 5 minute. This one here was the attempted liquidity grab, but a very weak one. So you might not take a trade of this, but then this one here, because it retested like the halfway of the wick and then closed bearish, you're still not fully sure, but then this one here closes. And now it's like, we're not sure if this was, sometimes they're much stronger liquidity grabs, but this was, just because it was like at the time of session, that this was a weak or an attempted liquidity grab. But then now, once we've got two other pieces of information that this retested this wick, and then this candle closed lower, leaving this imbalance, we know that we've had a liquidity grab and a retest. That makes sense? Yeah. 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 So sometimes it's much clearer, but other times we need that extra information just to say, okay, well, this was a liquidity grab then, and that was a retest. Yeah. So when we look at the 1 minute, we're not able to act on this as an attempted liquidity grab, and probably not the retest if we were concerned about it. Once it's happened, though, and then you target 50%. So you can target Asian 50%, or if this is a true Asian, so if this is a true liquidity grab and then the retest, that means that this support wasn't very strong. It certainly wasn't strong enough to make a new high. So if we're breaking below it, you can see the Asian 50 is right here. But I would be looking at the lows, which is lower than the Asian 50%. So you can actually have a better target. Just from this information, once it closed, you could then be looking to say, well, at least it should come back down to at least this candle, at the very least this candle. So we've got an imbalance, which will likely hold price, which it did. But then what happens is, like, it tests a few times. It's like tap, 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 breaking that imbalance. But then once it actually can break through, then it makes sense that it can then test at least this wick and then the lows. And that will be the next reaction point. But at that stage now, London's giving you the idea that it's manipulated the highs, given the liquidity grab and the retest. So where's London going? The trend is down. So London pulled back, got a good price, did the liquidity grab, and then a retest, breaking through this little support, closing. Asian 50's right there. That it could pose a problem. Like, it could pose that we could get a little bit of price stalling, but I wouldn't be targeting that as my take profit. I just wouldn't want to see price hit the Asian 50% and then come back all the way to your entry and then stop you out. Like, if it did hold, most of the time it wouldn't hold. But if it did hold, then and came back up, like, manage your trade accordingly. But you'd be actually targeting longer. Otherwise, you wouldn't want to get into that trade thinking that my take profits here, my stop loss was up here, and I was entering, say, here. Going for a 1-to-1, the risk reward wasn't there for it. That makes sense, Maron? So you go for more than a 50% Asian low. You just keeping an eye on that in case it does hold. But ultimately, like, the trend looks a little bit bullish if you're looking just at this. But we've got to remember what the actual trend is. It was down, and we just pulled up. And now we've manipulated the high, which London does. Now we can at least target this low to take some profits. But really, we want to see what direction London's going. So London, how we get that direction for where London's going is going to be via using our structure. So we've ascertained our starting point because we've had a liquidity grab and we've had a retest. And now that price is starting to, we want to see now structure form. Structure comes up, consolidates for a bit, pushes down, comes up, comes down. Now, where's my first and second structure on that leg down? Someone can draw. Yep. Is that your first or second? Yeah, there you got it. Yeah. Second, first. Yep. So if we're going to keep on pushing lower, second needs to hold. If second's not holding, then it's done its pullback, and then we're likely to be pushing up and retesting the London high or the current London high again. But if we can maintain our bearish structure that's forming, so treat this as once London's come online, we've got all these little areas to the left are going to be potential reaction points where price could bounce from, but ultimately London is forming, where the algos are kicking in, is that we're forming bearish structure. And what we've got is a first structure. When we are at this point in time, the most recent pullback that created that lower low, lower close is our first structure, and then our secondary structure is inside this area. So we want to see, if we're going to take a trade, we could be looking at taking a trade off of second structure, keeping your stop loss above it, and then seeing if we are going to take a trade off second structure, where do we put our stop loss? We should put our stop loss above a liquidity grab candle or above an imbalance. So when price did pull back, if this is our second structure, which we're aiming to take sells from, then we see a little liquidity grab candle. We see a better liquidity grab candle. So looking to take sells off the top of it, and then keeping your risk low and putting a stop loss above that to target at least where it came from. 8 times out of 10, if it makes a low, it'll retest that low. And already then, just taking a trade off secondary structure, if you missed all this up here, taking a trade off a secondary structure is going to give you a decent risk reward opportunity. So it would be something at least like that, at least a 2-to-1. But you actually are looking at the bigger picture. Okay, so then we just continue. Okay, price pushes up. It creates on the 15-minute time frame. This created that liquidity. No, wait, we're over here. This created that liquidity grab candle. Okay, so the 15-minute it spiked up and then pushed down quite strong. So on the lower time frame, now if it retests this zone again, the way that this left, leaving all these imbalances, that is a pretty likely area that we could see a reaction again. So that's why we've left this this colored box here, and why we've left these little horizontal lines, just to see where liquidity is going to be taken. Like, we don't want to be taking trade, like, say, in here, because it wouldn't make any sense. If it's going to be above this line, then it's very likely going to be testing this line. So any little fake reactionary candles here are designed to try get you into a trade early, and then you might take a loss, and then the real move happens. But you burnt yourself out getting triggered by price action that developed in areas that weren't part of your original plan to be looking for trades. Like, you're not looking for trades in the zone. You're waiting for these areas to be hit. Okay, so then price pushes down. Now what it does is it forms new structure. So what it's done, this is these first and second structures that we originally had now become, they've been taken. So this is your new first structure at that point. At this point in time in here, that's your new first structure. Second structure above that now is going to have to be back up here again. So it sort of moved. Price pushes up now. Now this time we can, sometimes it doesn't come up all the way to this top structure, but we could, in another world, we can say that once it goes down, makes a low, comes up, makes a high. Remember, I've said that higher time frames will give you, like, not necessarily high time frames, but you would be drawing your structure like that, from the low to the high. Now inside of this low to the high, you can actually have other little bits of points of interest. But the further we find these levels up higher, the further we refine it, then the higher the chances that we're going to miss the trade. So obviously there was a lot of volume that pushed down, and then the pullback was simply to a higher time frame area. So if I actually mark that up, That's the candle bodies, and looked at that like on the 15 minute, then it was just a which one is it? Where was it? No, yeah, I think it was that. If we do the 5 minute then. If we do 5 minutes, sometimes you go too high and you lose it. So 5 minute, this was the structure in the 5 minute. Once we break through, close lower, makes sense that we have retests of this area. So we need to keep on mind what's happening on all the time frames, but it makes sense, like why did it push all the way down and come up and retest from here and then start pushing down before again? Oh wait, no, it was lower one. So it was this one. Oh, you said that, the upper one, yeah. Price comes down, makes a low, comes up, makes a high, then closes, breaks lower, closes lower. Makes sense to retest that structure. Whether it got all the way up, it just didn't. So how can we get that? Are we always trying to take trades off the top of the structure? No, we're only taking trades off the. We only be looking for taking trades off the top of the structure if it closes inside the bottom of that structure, because then it will likely retest the high. So if it's creating the structure here on the 5 minute, and we see some types of rejections, this is where we could be trying to enter a trade. The trade-off is that you're never going to be able to have a tight stop loss when you're entering from the lows of here, and we're never sure if it's going to hold. So some trades you just don't take, or you just say, all right, I'm going to take a trade from here. Stop loss doesn't change. Stop loss should be above the structure, and then you're still retargeting the lows as a place that you can remove risk, or just say if it bounces off the bottom of the structure and then comes back up to your entry again, then don't let it become a loss. It'll be 1-to-1. You are hoping that the trend's going to continue and eventually break through these, which eventually does, and then just keeps on doing its structure again. But that would be how you are looking to enter these various ways. There's different triggers, right? Different triggers, either off a liquidity grab candle, or the way you enter off structure is a little bit different. I'll have to refine those in other videos, like how you treat each one. But know that there's different tools in your belt on how you can enter trades. Some are going to be really tight stop losses. Others are going to be wider stop losses. Is that all Gucci so far? Once we had price push down and then make this low, we don't have a new structure until we've closed lower. So this candle, that candle closed lower, forming new structure. So now the same thing is like, all right, well, the closest structure to price is this low to that high, which came down, came up, retested. Now it pushed down from here and was able to make a new lower low, lower close. But this time what we have left was a liquidity grab. So when you have these liquidity grab candles inside the structure, it actually makes it a little bit easier, because then you can say, well, price can often retest that. And if it's a liquidity grab, I can keep my stop loss just above it. Just above it plus spread. So maybe in reality it's going to be a little bit more. On the 1 minute time frame, that's very, very tight. But it makes sense then that if this candle here was able to push down and ultimately create a new lower low, lower close, then having price retrace up to it is a logical area that we can give it a go. Keeping risk low, high risk reward in this case, because even that would best be like from the open, stop loss even above it, that's 6-7 pips risk. Even just retesting the low, 8 times out of 10 it will retest the low. When you factor in spread, even that is a 2.8 to 1. So it gives you plenty of these little shots. Ultimately, we would have loved to have been holding the trade from the high all the way down. But say you miss it from up here because you didn't have enough information, you haven't missed the move, because if you had a liquidity grab plus a retest, ultimately then structures to start to form. And then getting entries on pullbacks is what you want to do. And how do you ascertain a pullback? Structure 1, structure 2, liquidity grabs, points of interest. Any questions about that? That all makes sense, Bill? That's what yeah. Yeah, that's really... Yeah. Yeah, yeah. Thanks, Peter. Catch you later. Remember the trades we were taking yesterday? How we took them. I'm going to go to London low again, Asian low, to see if we can get something for late London. We're getting to that time. It makes sense to start that pullback to London 50%. But remember how we took 2 trades up in here, small stops and lost. And then we got this liquidity grab. And then this happened so fast that we weren't able to, well, took in 2 small losses here, and then this gave you the signal, but that was like 6 minutes after that candle had taken that other trade out. It was just a little bit too soon to get back in. And then that liquidity grab happened in like literally 5 seconds. Sorry, the retest came in 5 seconds. But that you did get into the trade there. And then I had to wait for the pullback to structure. And then, yeah. And then I was able to enter on the structure pullback here. That once this candle was wicking up and then breaking the low, it was a liquidity grab. And then, then there was a retest option. Yeah, because that was my, when price had come down, starting point, first structure, lower low, lower close. So taking a trade off of here was good. And I wicked up a little bit higher because the 1 minute's quite fickle, but having nothing actually ever closed higher. So the structure was maintained than that wick. I can't refine that structure lower to the candle bodies because I don't have the second charts. So the 1 minute, I'm happy for like those wicks or those bodies to include that. Now, remember how price pushed down, remember how price pushed down and actually closed lower than here? Yeah, so then what that did is it gave me another liquidity grab candle, but it gave me a structure to focus on, a new structure. So that was where I re-entered on that candle and added the position to it to say, yeah, so it gave that reaction. It pushed up, came down, and then as it was breaking this low, that I was able to enter around here to add to my trade, add to this trade that was, add to the trade that was already here, and that was the second position. And then it just hovered for ages because it is a lower volume time. But then as price pushed up, I don't move my stop loss yet because my stop loss needs to be above here because that's my secondary structure still. And that was my liquidity grab. So having my stop loss above here made sense that I can keep it nice and tight. And then just trust that market flow is going to keep on going back to our original target, which was the, in this time of day, the London 50% is the one. And it's just a refresher of where that was from that London low to that London high. And that was your 50%, the halfway point. Not using the fib, but using the half of the London range. Made sense as a target. Then we often get this reaction, which can be a bit unpredictable. But then it was just a pullback again in the end. But by that stage, our trade was done. So let me just go to current price and see what we can jag now. Yeah, so it'd be nice if we can get a counter, because if it's testing this Asian low, we're doing a triple bottom here, no real liquidity grabs. This could be a liquidity grab, but see how this wasn't a retest of this liquidity candle. So I would imagine that it will still spike lower before that pullback. But now that it is sort of forming this low, which is reacting to this Asian low, we've got a London high up here. Yeah, like I just don't trust it. It could be a retest, but at that moment, I'm going to say I don't consider that a retest yet. Yeah, like up here, that if we weren't sure this was a liquidity grab and this was the retest, once it left, like it's actually leaving like it was a retest, because it's starting to leave a little bit of imbalances. Unfortunately, it's like once it's up here, then we can say, oh, it was a retest, but by that stage it's too late. But it's all sort of adds into our plan. We're thinking pullbacks. At the moment, this area here was my lower low, lower close from this low. And all of these other lows and highs haven't actually made any lower low, lower close than this wick. So I don't trust this as a high yet. I trust this as a high, being the liquidity grab. But then if I'm thinking, at the moment, I'm still thinking the order flows down. It's just we can get a pullback to second structure. So at the moment, this would be, well, now it's sort of come up here. I can just say this wick was my main first structure and is a resistance, and it could hold again. But my secondary structure is up inside of this area now, because this was really where price pushed down to make that lower low, lower close. Oh yeah. So I could say this was my structure from the low to the high that then led to the lower low, lower close. But now, like, do I need to keep it this thick? Or can I just now refine my structure and say, well, it's really that wick there, which has formed a resistance, to see if it holds. Yeah. Oh yeah. I was just I just removed it to clean it up a bit, and I was going to just refine this box. So that order block was inside of here. So now, at the moment, if this is all pulling up, this is my second structure, which is approaching now. So these candles trying to capture a lot of it, the bodies and the wicks. So I've seen a little bit of rejection. Now, how high could this go? If this is a true reaction from here, then now that I've got my London high, I can actually start measuring what my 50% would be. So from here down to here. So this area is my 50%. So we could be getting that pullback now to that 50%. If I go to the 5 minute, then it would just be a pullback to first structure so far. That makes sense. So we've got two structures on the lower time frame, but on the 5 minute, this is just a 5 minute pullback. If we look at the 15 minute, then it's kind of like a 15 minute order block. $30 minute, there's nothing. It's just trending candles. Yep. Oh no, it's this is five minutes. It's not very clear. Nah, because I'm looking at these wicks and then that being my first structure. And then as this is pushed down, then I'm saying like I'm using that low that's confirmed a break out of this structure. And then for me to have for this to be a second structure, I need something to then break and close below that wick. Because to me, it's just done this. Like it's sort of ranged inside of here, then pushed lower. But I don't have a new high. That has then led to a new lower low, lower close. So this is first structure. So we can see pullbacks even up to these higher areas. So we can give this a go. We're going to keep our risk low. We're going to try take a tight trade. And if we take a loss inside of here, then as long as we're following our plan, it's fine. But this is a potential area we could be pushing down. But it would make sense that if we are looking for a pullback to London 50, then we'd like to see price actually wick up into here, come down, and then break in this wick again. Then there's a good chance we're going higher. So it just depends on, like, we can make a profit buying and selling. It's just one's going to move further and one will probably move faster. As we've seen, like when we've taken these counter trend trades, sometimes it's like an hour for us to get 40 pips. And then as soon as we take profit, or then it just does 40 pips the other way in like 5 minutes. At the moment, this structure's holding. Nice reaction here, coming back down now to retest these lows. So I would really like to see a sweep of these lows into this POI and then make its way back to that London 50%, which is going to be just here. So I'll just mark them up, and I'll probably have to adjust those lines a little bit as price makes new movement, which is right on the Asian low. This one here. Or this one here. I think that was my imbalance. Yeah, it was my imbalance on the 1 hour, I believe. No, it's not. Hold a sec. Not the 1 hour. Not the 30-minute. Not the 15-minute. Yeah, let me just go to it. Oh yeah, it's the liquidity candle. Yeah, it's that one there, isn't it? 5 minute. There's another one actually just right here. So all of these are like going to be little magnets for price. Yeah, it's the low of that candle. Maybe I've actually moved it when I've grabbed it mistakenly, but we could be even putting it halfway. Either way, it's like when price pushed up, this was obviously an area where price pushed from, and we've never come back and retested it again. So it could hold a reaction area. And we know that around these key levels, 1760 key level round number, we could have 10 pips above and below. Could be a zone. So we've got zones, we've got POIs around these lines. Okay, so let's see. Looking for it to sweep. At the moment, order flow's down. Now we've got a retest. Now we've actually, it still hasn't retested this candle. Inside of here would have been fine to execute it on a sell. But that was very quick. But it was inside of our zone, and stop loss would have been above the liquidity candle. Yeah, and it made sense for a little pullback. So, like, the moves are actually making sense. It's just we want to take the move that once we've got enough information with confidence to then fully execute on. But it's getting close. We're getting really, in this London time, we would expect. So at the moment, sort of just it is ranging as well. Inside of here, this could be a little fake out. Let's look at the 3-minute. Doji liquidity grab. I would really like to see a sweep and then a full-on rejection to then target 50%. Yes. Yeah. Or if we're going to, yeah, at this time of London session, it makes more sense to be retracing the London 50%. Okay. Right. Mm-hmm. Yeah, okay. Mm-hmm. Yeah, for it to move. So if we pull down again, I wonder if we can execute something. Let me just get my terminal up. Okay. I'd love to see this low manipulated or seeing something come up to our second structure or our London 50% or something lower and then start to push back up again. Let's look at the 15-minute candles that have closed, because this one just closed now. So at the moment it's retesting that order block. Makes sense that potentially we can do a wick fill. So it's already done a rejection first time inside of this area. So can we get a second shot at going up? Liquidity grab, doji, liquidity grab. Wasn't sure if that was a retest. It's come back down to retest what we thought might have been the retest, and now pushing up again. So at the moment, stop loss is too big for the risk potential, but it makes sense to be breaking this wick high and then pushing to fill this clean candle, because we've got it in balance again here. First structure's been taken now, so we can probably remove that and then say this is, at the moment, it's just creating this little support. And it makes sense for that retracement. If it keeps on dropping here and New York session starts, it makes sense for New York to manipulate the low, then give it that pullback. Yeah, or pretty close to that London 50. So let's see. Let's see if we can get like a little pullback again and then break this high for the second time. It's a pretty crappy zone in here though. I'd rather just see it come back and give that proper retest. Push up. I'd love to see it come back down to here. So if I saw something and then push up, I'd be happy to execute on something like that, keeping a small risk and then trusting this candle. I'd give that a shot because the risk reward would pay off. Yeah. Yeah, stop loss would be underneath. But this makes it very easy as well to manipulate that low. This is trading in a range. So we're just trusting, like we're thinking that this is basically our range. And how we're going to get a breakout trade? Or can we just say it's going to keep on ranging? But the time, we're running out of time before that NY volume comes in. It's just a playlist on YouTube. No copyright one. I'm hoping it's no copyright. Yeah, I will. If this can form a resistance, then breaking that resistance could give you a bit of a shot. Oh, maybe it's just going to go in one. But it'd be nice if this comes back now and retest. Maybe it's just gone. No, we're still in it. Keep on. So 5 minutes going to come to a close. See if we can leave this range. Nice close on that. We might have missed it. Missed the potential breakout, but it will give you another opportunity. So if we want to see a reaction here, and then if it's breaking that high, then it's going to keep on going higher. So let it pull back first, and let it break it. Then let it break its high. Wait for the pullback. If it just goes, then it just doesn't give you a shot. It would have been an impulsive. Like once we closed inside of here, it made sense to retest the high. But then it's like I don't want to take a buy as soon as it's breaking the high. I'd rather see it break the high, pull back, and then break that high a second time, and it would have been really quick. They're definitely not the easy ones. But then yeah. Because you'd be using that if this is the volume candle, this one, then you don't really want to see anything come back more than halfway. So that would be if you put a stop loss underneath it, but then if it's breaking the low, or sorry, breaking the 50%, then it'd give you a chance to potentially manage it. But this is good. This is good indication that where we're looking to go into. It should just pull back, fill this wick, and get this start pushing up to this London 50, which is pretty typical for this time. A little fake resistance. Maybe we can do a little pullback, break this high, fill that wick, and then continue. At that stage, like because we didn't get the entry down here, then what would make more sense at this time is let that 50% hit and let these areas give you that sort of relief. Yeah. Yeah, so we can wait for so that makes sense, all this stuff that's happening. Now this could give you a little bit of problem, this candle here. Torso 1981. So it said, is it going bull now? It's at this time of day we get a retracement. So it might not be bullish overall because we're in a bearish move, but it makes sense to at least pull back. It makes a lot of sense to pull back. So how deep that pullback's going to go. Oh, see you, Rodney. Makes sense that, like, this is a very typical move. Fill in this range. Now we're seeing this little rejection because this candle was a problem. This is the one that caused that move down. So if we're waiting for just our sell bias, we're just waiting for London 50 to hit, this line to be hit, or inside of this zone. So yeah, it's only 15 pips away. If this could react and respect it, wick up and then start breaking this candle low, it could be a fake out and we're back inside this range. So maybe that could be a sell opportunity for, if we can even get 20 pips and just quickly secure profit and then let the rest run. At the moment, it's giving a nice little reaction from there. 1 minute left for the 5 minute candle. We're coming to the hour candle close. It's looking strong bullish at the moment. 30 minute at this little conjunction point. Can we make a lower wick down, retrace a little bit, then fill this bullish candle on this way up? And at least then we're sort of partaking in the sell, in the bearish pressure. Let's see. Otherwise, I think it could just keep on going up for these more attractive targets for sells. Yeah. If we can get a little close under here, I really think it's just going long. But if we can get a little close, we can play the range. It's going to go higher. Might give it a little shot. See if we're breaking this wick down, break this high, and then we can get a shot into. I might have to. Oh, the risk reward's not there, but out of interest, I'm going to give it a little go. Yep. So I'm in now. Going to give it a little go just to see if I can, if this theory plays out. When it broke the high, I entered. Stop loss is just over here somewhere. And we'll just see if I can push up to the London 50, potentially this little area, and then I'll secure at the 50. Just hard. I'll secure 50 because I'm playing with fire here. What are you saying? Yeah. I don't like how it pulled down, but it's still looking okay at the moment. So I still think it's going to push up past here into these zones. Are just so late in the move. Yeah, we're getting close to this hour close as well. So this is the last minute that it needs to push. Otherwise, I'll close 50. I want to see that last little push higher. Main thing is just to keep the risk low. Yeah, I'm worried about the new hour given that lower wick. So I really want to see it push. Close bearish. So I'm just going to quickly close 50% on that one, just in case. So moved 50 here, just at break even, or like 1 pip lower. I'm worried about the new hour candle opening, wicking down. But this one's definitely playing with fire. There's a little push. Okay, next minute is going to have to just push and leave it here so I can move to break even. Yeah, I don't want to hold it for the new hour. Okay, I'm going to move to break even and then just see what it does. Yeah, it was more just a proof of concept. Even though we're playing with fire, that breaking, little retest, breaking, and then moving to here with the new hour. I don't like the pullback, so we need to make sure we're good risk management, but as in like, what's the structure doing and the time of day, what makes sense? And if we can just get a straight up, push up. So now I'm up. Oh, it was 5 pips, 6. There we go. I'm up to 1-to-1 now. Now this is at that point where it was 1-to-1. Closed another. I just closed 25% here. Stops are still at break even. And then I'm just going to see if we can ride up to these areas. And it was just to get something in to prove what's going on. But then also just to, I know I'm playing with fire. That was a shitty entry. The better entry was what was down here. But the idea made sense. Looking for pullbacks to a better area to be looking for sells from. Now, this could pose a problem. This little line, 66.62, might see a little bit of a stutter around here. Otherwise, it really clears up their pathway for our better zone that we're looking at. Running at 12 pips up now. So it's up 2-to-1. Still 25%. This is going to be a little bit of an issue. But I want to see it break above. Sorry, what was that? Oh, yeah. It was the imbalance, I believe. I think it was. Oh, yeah, 15-minute. Yeah, that line there was the imbalance. And then this here was the 15-minute wick. So this is where I'm thinking price is going towards. But we are... Yeah, like... Yeah, this area is giving us some problems. So I think I'm just going to take that where it was. Pretty comfortable with that, and I don't want it just to come back now because we are really playing with fire at that point. So let's see if this monthly level holds, and if this can form that bearish candle, I'm going to bring the stop loss just underneath it to around there. Just want to wait for this candle to close. Yeah, like this is really as much as was originally just targeting, and oh, okay. See how this pulled back to the imbalance? So that candle, when it broke impulsively, it makes sense that it could come back to that little area. Now, if we're staying underneath this monthly level, I'd really love to see this candle close. And if we can break the high, then we're just forming bullish structure to go a little bit deeper into the move. But, you know, my whole emphasis was to try and get a buy around this 10:30 London time to around midday, that we take the low and then we push back to 50% of the move, which happens a lot. I don't like that doji close, so I'm out. Yeah, it just took my remaining position out. So good hyper scalp. Good hyper scalp that got up as far as 2-1. Just explaining these like highs made a lot of sense. You know, this line doesn't quite match up. So maybe I'm not sure if I moved it from the start, but it makes sense that we can't ignore, just because I got a line there, that this was here. And it made perfect sense for it to be, with the new hour candle, to create that lower wick. Made a lot of sense. To push up there, get 20 pips, and now have that resistance forming. So this is the similar move what happened yesterday. Is that it sort of just drifted to the London 50%, and then we had that really nice, strong, impulsive. That's yesterday, 1703. This one here, this here. Yeah, that was perfect London 50, and then we had this strong move up. And now what we're doing, like the trend before that was up, then real slow drift back to 50%, strong reaction. Now on the 50% here, again, trend was down, slow move back up, not as slow, but slow. And then from that 50, we're having another strong reaction. Not, but it's still the volume's just not there. There's still only 20 pips really. But it made sense. The buy there made sense, and the reaction made sense. And what have we done, really? We've just pulled back to structure. Now, how do we want to get into this? I don't want to counter trend a 30-minute candle like that, or the hour candle that closed like this, because really at the moment it's just, here's our support, here's our resistance, we've got our ideal zones, so let's just let the trade come to us, not us to go to the trade. So, you know, we've got our zones, we're going to wait for it. This one here, you draw it. Yeah. Yeah. If this wick was manipulation and these wicks are manipulation, then we could just be playing inside of this range for a while. So any pullbacks, the little structure. To play the range for sure, yeah. And we know that what New York often does is breaks out, fakes out. And then it could reset this volume and then break out again. So it's messy price action. But it is making a bit of sense where we can get trades to and from. A little bit, like this tight, it sucks. Like it's not clean. But in terms of like where we could be looking for, like little order block, break above, not above the wicks. Now I respect the bottom of that structure. Very typical. This could be the low of that hour candle, potentially. Or maybe like it's the current low, and then maybe if it can start flipping bullish, start filling its wick, breaking its high, and it could reject off hard and then drop down lower again. That's always a possibility. But at the moment, like if we're going with this hour candle, which was a liquidity grab in itself, given that that wick's lower than the previous one, closed higher than the body, wick's not higher, so that's like a type 4 liquidity candle. Then we've got on the, this is still the low, so we can still get this low swept. But if we're going with the current hour trend is liquidity grab, retest, whether it was once or twice. But now once we've got the liquidity grab plus a retest, now we're just looking at structure. So structure is sort of pushing up, pulling down. I wouldn't really consider that structure, but once we have something like this one, which is closing higher than here, now we do know that in this area was our starting point structure. Price is then pushed up high, made a low, and then pushed up, and at this stage we've closed higher. So we can say that that's our first structure. Price pushed up, come down. Whether we consider that like a little pullback, and maybe on the seconds chart, this would be second structure, but on the 1 minute chart, that's just first structure. Now price has come down, reacted off of it. Little doji, little bullish candle, pushing up, got a little tiny resistance there. No volume, so we're just responding to all these little levels, all these little micro levels are holding price. If we see like price holding here and then push up, come down, and then breaking that high again, then we can revisit these highs and then extend the new hour candles range. Oh, okay. Got a question regarding structure. Post in Discord. Let me have a look. It's just the lurker, yeah. All good. Regarding the structure 1, structure 2, 5 minute chart on gold, would you guys consider the pink area as your structure 1? No. That was the question. Whether on the 5 minute chart, that was your first structure. That was the question that Bill was asking. That I'm kind of looking at these wicks. And if these wicks are the low of my current structure, so just make it really thin. You get one. You understand what I mean. I'll try to do it perfect. So from these wicks, at the moment, structure 1 is this whole area. So this is just pushed down and closed at the low of the structure, then done a little pullback and then pushed down. So this candle here is confirming that this whole area was your structure and that you can just refine it to the candle bodies as the more likely reaction areas, but you wouldn't consider this as a separate structure. On the 1 minute though, probably, but the 5 minute, no. That makes sense? Yeah, perfect. Bill had the exact same. He looked at the exact same thing over here. So I think it's in the recording when I upload this. At the moment, support's holding. We just made that lower wick for the 1 hour or 30 minute. 30 minute is looking maybe better as a lower wick. We still have this imbalance though as well, so maybe it can give another drive down, but ultimately I'd be thinking bullish. Bullish liquidity grab. Oh, we missed it. Liquidity grab retest. Makes sense, huh? That 5 minute candle closed as a liquidity grab, and then that area between the candle body and that candle wick, the 50%, is a decent reaction point. This one here, yeah, I mean, true. It is. It can give you conflicting signals that this is a liquidity grab sell, then we'll go liquidity grab buy, and then what I'm in the back of my mind is what's happening on the hour time frame, and that hour is bullish, and now I'm thinking, well, it makes sense to continue with that hour time frame to at least, like, it makes sense, like at this time of day, that when we break the hour high immediately, then we can get that wick down, and then we can then push up again. So it's like, which way are you leaning to? Because you'll probably get reactions both sides, especially if there's not much volume hanging around. So this could just be forming a wick, breaking the high, and now we could be retesting this high and then pushing up into these areas again. So not sure if I want to give it a go, but I would not be surprised if now we're pushing up to this high and we're just going to be maintaining this structure. Stop loss though, if I'm entering here, I'd be wanting to put it under here, which is a bit of a wider stop loss, because at the moment it could retest this area a couple of times, and it could even come back and retest more or less this imbalance. Yeah, it's patterns within patterns. Yeah, market will have, and that's where I think a lot of people get in struggle with is having which you do your structures in your analysis on one time frame, and then the lower time frame will tell you something different. And it's like, well, which one do I trust? And that really comes down to timing in the market. Like, am I trusting that this time of day that more likely we're going to be pulling back to 50%? So where should I actually consider a starting point from? You see like why it's sort of hovering in this area. Like that's giving us little problems, and this is giving us little problems. And it's just like, we could almost even say that this is a little mini range until it's building up enough orders to then break out of it. But I'd be leaning to the upside. This is definitely a problem area. And that now that was this just a little liquidity grab to push up to the liquidity grab up here and go with the ultimate trend. That's why I'm hesitant to touch anything inside of here, but I could understand why it's going to go up, and I can understand why it will go down. But it's sort of disguised with where the market's going to go, and I can understand both directions. And if I can understand both directions, and if the risk reward is not there, then maybe I'm just happy to let it go and just sit and just wait for a trade to come to me. Like, I really like this area, and just because it's given me potential price action inside of here doesn't mean I need to execute on it. So until this, I don't trust this low. I trust this low more because it was the one that actually led to the higher close. But if we're retesting this low again, that failed to break, and as it's coming down lower, if it's breaking these lows, then it's going to go a little bit deeper. But what I'll do is maybe we'll go we'll just see what happens here if we can get it going up. But I'm going to have to take a little break and then sort of just reset in time for London session, New York session. But I think this is just meant to be a test stream, so hopefully I can do more. And I'll just check the sound quality and everything. Let's see. What is it now? 3 pips or 5? Jeez. Yeah. 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 And no commission too. Yeah. Yeah, because my German 40 on my broker's one pip or point 0.9, no commission though as well. But my gold, no commission is at the moment 1.2, 1.5, 1.3. Yeah. I've got my personal broker is Pepperstone. Yeah, but then on with the other one, Forex FTs is I'm not sure who's under Sirius or something, but it's the Aussie side. So my pound pairs and golds much better for that platform. Yeah, but that one's that one's rubbish for some pound pairs or two. No, it's that's the best I've seen for German four. It's the best I've seen, so it makes it really nice. Really, you can tell which assets they want you to trade. Yeah, yeah, yeah. Um, I see markets in general has the better spreads, but then they're not available for everyone. But you pay commission on top, like the low spreads because you're paying commission on the side. Whereas Pepperstone, I'll pay commission on everything but indices and commodities. So it's really good for like trading gold on it. But then if I want the tightest spreads, then other brokers will give you even tighter spread, but you'll pay like a dollar figure per trade. No, no, I've got no, I've got MT5 on another screen. It's much quicker. It's like it's not very good for doing analysis. You can do like very basic analysis on it, but in terms of like execution speed, it's very good. Trading view, like when I look at this candle, and then I look at my MT5, like the candle bodies and opens and closes don't match up, so it makes it a little bit messy. But it's about 1 second or half a second faster on my terminal than it is on TradingView. So I like to do my analysis on TradingView to identify my levels, but in terms of execution, like when it's breaking a high, I'd be looking at my MetaTrader. This is looking like nice solid bullish candle, a little bit of a retest. Now are we going to get this volume to kick in and break through, or is it just going to be consolidating for this little pre-NY area? Oh yeah, Blueberry as well is another one like Pepperstone, and they're better. Yeah, so Blueberry markets don't have commission on gold, and their spread's even better than Pepperstone. I haven't gone across to Blueberry because Pepperstone give me Pro Trader, which means that I can, because it's through Australia, I can access 500 to 1 leverage. Whereas if I'm, and I think you can do it. It just depends on your client manager at these brokers, that you can just say to them, look, give me the 500 to 1 leverage. But if you're just starting and you join, most of them are going to limit you to 20 to 1 leverage on commodities, which kind of sucks. Doesn't kind of, it really does suck. Currencies are 30 to 1. So at the moment with Pepperstone, I've gone through the whole rigmarole of just saying to them, look, I'm an experienced trader. I've been trading for this long. Here's my records, and then they've allowed and said, you know that you're going to risk you're giving up your rights of negative account protection, and all these other things that it used to be. I'm like, yeah, I understand all those. I understand the risk of trading. And then they say you can have the 500-1 leverage then. Blueberry, I haven't gone through the process of doing it, but if I was going to leave Pepperstone, I'd try Blueberry next. Or IC markets and just pay commission. But it's pretty attractive not paying commission and having tight spread. Yeah, so this is the typical thing. Like I really like my moves are with London open, going with the typical direction and looking for euro high, euro high or euro low manipulation, or if you're close to the Asian high, Asian low, looking to see it manipulate and then reject, give a liquidity candle, plus then a retest. And then you see the structures start to really play out. That's my euro. Sorry? Yeah, pretty much. Pretty much. That's the London Open behavior. Now, that's the London Open, but if I'm trading around like from 10 to midday, the move is manipulate the low, pull back to London 50%. Now that we're getting really close to this NY Open time, I prefer just to sit and wait and see how NY manipulates either the London 50%, breaks, pulls back to structure, and I like to see that manipulation sort of play out and just wait and build information. And then my real go-to in New York would be, there's a little play you can do on the close of the 4-hour, oh my God, close of the 4-hour candle, or after NYSE. So something's happening pre-NY. Pulled back to the structure. That's why I don't trust these lows, because if this is the low that then pushed up and then failed the break, then as it comes back down to this low, it's going to go lower. So this time it came back down to this, just broke the low and then gave you that really, this is the kind of move I wanted here, but it got too close to NY Open. So then you get too close to the next batch of manipulation. Now we're at this level, so this would be a prime area to start looking for rejections and go in with the flow. But let's see if we can just get like a little continuation. But now I'll see it's like, just don't force trades here. Really wait for trades to come to you. Could be a heavy rejection. Let's see. Go for another couple of minutes, but then I'm going to run shorter time. 5 minute is looking, just these areas. Once you can refine your eyes and seeing these and marking them, they really, 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 really nice. See how sometimes I misdraw it, but it was this wick body and the wick, the body to the wick, and you're looking for reactions off the body or the 50%. Now look where that impulsive push went to. Pretty nice, huh? Nah, yeah, they never stop at their random place. All right, well, I'm gonna end it here. I'm gonna have a 30-minute break, and then I'm going to reset myself. So, thanks for attending, guys. Thanks for helping me with this trial stream. We're gonna listen back at the sound. Hopefully, then I can just keep these settings stable. Awesome. Yeah, I think we got some good learning there as well. Awesome. All right, guys. Well, I'll see you in the Discord and catch you on Saturday as well. All right. Catch ya.